Welcome to the Be Smart podcast, how not to be an idiot with your money. Who we got there, Tars?
Yeah, that's Tars.
Tars, what's up, dog? Guess Cat.
What's up, buddy?
Happy Pension Tuesday for all my pension heads out there. There are dozens of us. Thomas Pension just dropped a new book today called Shadow Ticket. You excited for this at all, Jared?
You're going to be surprised, but I'm not familiar with him.
I'd say like a good place to start would be Crying of Lot 49. It's a short book, but it'll give you a good intro into his style. A lot of paranoia, a lot of conspiracies, a lot of underground society type stuff.
How old is he?
He is 89 years old, and he just put out a book. This is probably the swan song, but I'm excited to go pick this up after work. What's going on with you, homie?
Not a lot. Just got back from a trip to Connecticut. I had 3 trips in 3 weeks, and I'm DJing in Conway next Thursday. I got a short trip to Nashville in a couple of weeks, but I'm mostly around for like the next month or so.
I saw something where you were concerned about the Conway crowd coming out with their pitchforks.
Devil music.
The devil music in Conway. That should be interesting.
Yeah.
What else we got going on? We got recent development here with the DirtCon is in Nashville next year. That was recently announced.
I'm actually surprised I didn't get more engagement on that announcement.
Really?
Yeah, I didn't really hear a lot from people. But it's going to be in Nashville, October 15th and 16th, 2026. Probably going to start selling tickets February, March of 26. It is going to be a little bit more. It's going to be a lot more expensive, but it's going to be worth it, I think. Did you never went to the Pawleys Island conference? Did you?
No.
Yeah, I mean, it was nice because it was intimate, which was really like the big attraction of it. But it was a little bit of a dump. The food wasn't great. Nobody cared. Like, they had a great time. But I think, we were just starting to outgrow that space, and it was time to do something bigger and better.
And the new venue, the Virgin Hotel, correct? That looks really nice. I looked at it.
Yes, the hotel is great, and we're going to be doing an event at Night We Met, which is the club you went to. So Thursday night, we're going to be doing a party at Night We Met.
And then I saw your awesome portfolio book cover was released. Very bold, very loud. I like it.
Yeah, that's what I asked for. The No Worries cover with the sunglasses is a very smart cover. Like, if you get the joke, it's a very smart cover, but it doesn't really grab you. Like, it's not really like loud and in your face. I said, I want something like loud and in your face. So they gave me exactly what I wanted. So I'm pretty excited about the cover.
And when does that come out?
September next year, about a year from now, a little less.
Okay. You want to dive into market headlines?
Yeah.
Let's talk a little AI to start. The AI bubble is the only thing keeping the U.S. economy together. Deutsche Bank warns when the bubble bursts, reality will hit far harder than anyone expects. Then there's this headline from Bloomberg. OpenAI's golden touch spreads as stocks soar. So in short here, OpenAI held its annual developers event on Monday, and mere mentions of other publicly traded firms by presenters sent those shares soaring. Even more on the AI mania front. OpenAI and AMD announced a massive computing deal, marking a new phase of AI boom. So this is a multi-billion-dollar partnership to collaborate on AI data centers that will run on AMD processors. One of the most direct challenges yet to industry leader NVIDIA. The news sent AMD up over 23% on Monday. And then OpenAI just announced a bunch of other collaborations with companies including Spotify, Zillow, and Mattel. Are we exhausted yet with all this AI noise? And then based on kind of some of the stuff you've been writing about lately, I take it you agree with this idea that AI is one of the few things propping up the market. And when this bubble bursts, it's going to get kind of ugly.
Yeah, it's a big bubble. I was thinking about like going in with this Samuel Jackson meme and where he's pointing the gun and where he says, say data centers one more time.
Pulp Fiction.
Yeah, Pulp Fiction. Whenever there's sort of a boom somewhere, it attracts a whole bunch of people who have no idea what they're doing and are completely out of their depth, And you have people in the data center game who just have they're like, oh, I hear you can make money building data centers. Let's build a data center. They have no idea what they're doing. And it's being built with private credit. Like they're issuing private credit to build. I mean, it's like the market, the market is down right now. So today is Tuesday, and the market kind of dropped intraday. And I'm starting to wonder, like, this is like the first crack we've seen in the S&P in a while, and I'm kind of wondering if this is the beginning of the end. It's getting really stupid out there, and that Deutsche Bank headline that you mentioned, where AI is like propping up the economy, like, I actually think that's true. I think that's absolutely true. If you took away all this AI investment, what would be left over? Not a lot.
Any other bubbles or mini bubbles you're seeing out there? I mean, you mentioned
Oh
private
yeah,
credit.
there's uranium, which is sort of related to the AI bubble because you power this with nuclear. So there's uranium, there's clean energy, there's aerospace and defense. Um, there's a bunch of other mini bubbles out there. Um, Happy to say that the one thing that's not in a bubble is gold. But even gold,
4K
like
today.
well, the futures got over 4,000. Spot did not.
Oh, okay.
But somebody emailed me and said that Jim Cramer likes gold now.
Oh,
Um,
no. Oh, dear.
so I really hate to beat up on Cramer. Like I'm not one of these, Jim Cramer is always wrong people. And I don't know if you remember this, but he was really getting beat up at one point and he actually cried on TV about it. I'm like, leave the guy alone, for crying out loud. Like, first of all, he's kind of old. Like, and he's in like his late 60s. And, the guy makes predictions constantly. And obviously, a lot of them are going to be bad. Anyone who makes like 50 calls a day, like for sure, like 25 of them are going to be wrong. So it's easy to pick up on the ones that. So I'm not really like an anti Jim Cramer guy, but the fact that he's warming up to gold now is not a good sign.
Aren't there inverse Kramer, people out there who just take everything he says?
Somebody launched an inverse Kramer ETF. The ticker was SGIM, short Jim. And I don't think it lasted. I don't think it's still around. I think they closed it. I'm not sure. But yes, there was an inverse Kramer ETF for a while.
We should do a private equity check-in. What happened with Blackstone last week? And I believe it's still going on. What's BX at now?
The stock is down. It's trading around 163, I think. It got up to about 185. Basically, it's this First Brands bankruptcy, which initially they thought was at like a $6 to $8 billion bankruptcy, but it turns out it could be as much as 50 billion. There's just layers upon layers of debt. A lot of it lives in CLOs. Like this is, I mean, in the grand scheme of bankruptcies, it's pretty big, but it's not humongous. And the fact that it's having such an impact kind of tells you, like, if the economy ever did hit the skids and we had multiple defaults, like, private credit is going to be doomed. So if you look at all these publicly traded private equity, private credit names, Blackstone, Ares, Apollo, KKR, like they're ugly charts. They're ugly charts. And they've gotten ugly in the last couple of months. Like the S&P has been making new highs and the private equity, private credit names are making new lows. So something to pay attention to.
Our next headline here, Bitcoin, gold, and silver surge as run-it-hot policies fuel flight to safety. Over the weekend, JP Morgan analysts noted the rise in precious metals and cryptocurrencies against the backdrop of what they called dollar debasement. The US dollar index is down more than 9% year to date. What do you make of this trend? And do you see this continuing for some time?
I think we're going to get a correction. So I said in the Daily Dirt app, which you should subscribe to. If you're not subscribing, you should subscribe to the Daily Dirt app. You can do it on the Jared Dillian Money website. You can do it on my website. You can do it on either. But when gold was around 3,800, I said there was going to be a correction, and it's gone higher. But I still think there's going to be a correction, just kind of for technical reasons. But the short dollar trade is pretty consensus at this point. And if you look at the dollar index, it's kind of forming a little head and shoulders bottom, and the dollar has been up 2 days in a row, pretty big. So I'm kind of wondering if that's going to reverse and that's going to lead to a decline in gold in the short term. Now, just for context, I mean, I think, I'm bullish on gold for years into the future. I mean, if we get a correction down to 3,500, I think you buy it. But I do think we're going to get a correction sometime soon.
What about silver? How's that doing right now?
Interestingly, gold is up today, but silver is down quite a bit. Silver has gotten very volatile. We've had multiple days where you've had $1 moves in silver or more, up or down. It's gotten extremely volatile and very hard to trade. So yeah, you should get a correction in silver too. I wouldn't be surprised if you get a correction down to the low 40s in silver.
I saw Bitcoin surpass 125K. It has pulled back about 3% today. It's to 121 now.
Not bullish on Bitcoin at all. If you think that we're topping in stocks and we're topping in AI and tech, then that should not do well.
We haven't really discussed banks a lot on here, but here's a big headline. Fifth Third to acquire Comerica in $10.9 billion deal. The buyout will create the ninth largest U.S. bank with approximately $288 billion in assets. Do you think this could usher in a wave of consolidation in the industry where regional and community banks have struggled to keep up with tech, regulatory, and other costs? Will we see more M&A, perhaps among weaker banks or distress-driven deals?
The answer is yes. So you said it was Fifth Third and Comerica?
Right.
Those are pretty big regional banks.
Yep.
The other big one that happened a couple years ago was SunTrust and BB&T, and they formed Truist, if you remember. And Truist is the sixth biggest bank in the U.S., and this is going to be the ninth biggest bank. I don't know what they're going to call it. They'll probably come up. It'll be like Fifth Third, Comerica, or some crap like that. But yeah, like I'm not surprised to see that at all. This is actually the first I've heard of it. I didn't see the news when it came out.
For our main topic, here's a headline for you. The economy shrugged off past government shutdowns, but this one could be different. Some key points here. The current government shutdown isn't expected to leave scars on the economy, but that could change if President Trump follows through on threats to fire thousands of federal workers. In past shutdowns, the U.S. economy has continued to chug along with employers adding jobs and stocks rising, but permanently laying off federal workers would be an unprecedented move and could damage the labor market at a time when it was already deteriorating. So, Polymarket is currently pricing in 30% odds that the shutdown could last 30 days or more. That would make it the longest in history if it exceeds the 35-day shutdowns of 2018 and 2019. Thoughts on the shutdown right now and its impact on the labor market? I guess we should also talk about the data blackout going on right now.
Yeah, well, let's talk about that first. So, as somebody who trades interest rates a lot, the data blackout is super annoying. It's very hard to trade interest rates if you don't have any economic data. I don't know what they're going to do when the government reopens, if they're going to release it all at once, or I have no idea. So another thing I saw today about the shutdown was that Trump was saying that federal workers are not entitled to back pay. So historically, during a government shutdown, if there was a shutdown for 30 days, they would just get paid all the money that they were owed during that 30-day period. And now potentially they're not. And I did see that they were talking about laying off like 100,000 government workers, which sounds like a lot. But it's not even really a tenth on the unemployment rate. It's not a huge amount. But you would see payrolls go negative, once the BLS starts releasing statistics again.
Any thoughts on how long this will last? Think this is going to go on for the foreseeable future?
I really don't know. Like, I worked for the government from 1992 to 2001, and there were no shutdowns during that period. I don't really have like a frame of reference. And also, like, I'm kind of dumb about politics. Like, I really don't know anything about the legislative process. Like, for somebody who worked in government, I don't know how the sausage is made. I don't know the source of the disagreement. I haven't taken the time to learn. So I would not be betting on Polymarket. I'm just not informed enough.
With the week ahead, the shutdown is likely to delay the release of several of these economic indicators, including data on U.S. trade deficit, weekly initial jobless claims, and wholesale inventories. But investors are still expected to hear from Scotty Bessent, other Fed top officials. Consumer sentiment data and Fed meeting minutes are also still expected to come out this week. Anything else you're looking at?
Well, the Fed meeting minutes will be interesting. Scott Bessent, man, he's that guy. I just, I'm kind of wondering. I'm just getting back to your initial headline that Deutsche Bank said that you led this off with, that AI was propping up the economy. Like, it really feels like the last tent pole in the economy. And if that gets knocked out, like it's going to be ugly. So yeah, it's funny. I've been looking for a place to short stocks. In the newsletter, I actually got bullish for a time, then I changed my mind and I got bearish. And I'm looking for a place to short stocks. And honestly, I think it's here. I think the risk reward is pretty good. So
for AI names,
well, maybe. Are you familiar with Oklo? This is a stock I looked up today. Have you heard of this one?
What's the ticker?
It's a nuclear stock, OKLO. This is sort of a pie in the sky nuclear uranium stock. It's gone parabolic. I'm pretty sure it has no earnings. I'm pretty sure I think they've committed to delivering a reactor in 2040. So 15 years from now. So this is all fluff and dreams and everything. And this has turned into one of the biggest names in the uranium ETFs. Like, this is all really late cycle stuff, like really late cycle stuff.
Anything off markets? How are the Yankees holding up?
Not so good. Not so good. They got trashed in Toronto. They're back in New York tonight. Carlos Rodon's going to pitch. They got to win 3 games in a row. So they got Rodon going tonight. They got Schlittler going the following night. And then the number 4 starter, which is Luis Gil, is supposed to go for game 5. If they get to game 5, that's probably going to end up being a bullpen game. But I'm not very optimistic. It's funny because if you think about it, if you think a team has a 50% chance of winning, the chance that you will win 3 games in a row is 0.5 times 0.5 times 0.5, which is 12.5%. And the TV, I guess was FS1, said that in a best of 5 series, the team that was down 2-0 had an 11% chance of winning, which is basically like right in line with what probability dictates.
Well, good luck. Wishing you all the best. That's it for this week. Please, everyone, like and subscribe if you're watching on YouTube. Drop us a comment, drop us a question. Happy to answer them in future episodes. I got to get my mind right for this pension book, so I'll talk to you later, Jared.
All right, see ya.